Ooh-wee, Bitcoin crosses the 100,000 mark. That's a lot to rave about. I like to share with folks that I'm not anti-crypto. I am crypto cautious, and there's a way to allocate with discipline. So let's chop. Hi, I'm your host, Dr. Preston Cherry of the Life Money Balance Podcast. Welcome back, where we let your life lead your money, not your money lead your life, where your life and money are working concurrently to help you achieve your life's design. All right, let's chop Bitcoin. It finally hit that 100,000 mark that folks have been coveting. As far as those Bitcoin and cryptocurrency enthusiasts, it is a rallying cry. And, kudos to the resilience of, crypto staying around for a decade and being an alternate to traditional finance. So you'll hear some words like TradFi in this podcast. You'll hear DeFi, which is decentralized finance, and BeFi, which is behavioral finance. And because there is a lot of emotion in investing, then it would behoove us not to talk about cryptocurrency and Bitcoin in particular, and see what's the rave all about, and how to be cautious, so to speak, in your allocations. Now, a lot of folks out here are over allocating in some instances to cryptocurrency. And there was a recent article in the Wall Street Journal that breaks down, the ages of holders of Bitcoin. And it tells us a lot about, who's holding it, why, and the like. So we're going to talk about that. I mean, first of all, we got to talk about what the belief system is around, cryptocurrency and all the coins and the blockchain and the like, right? And people in general have, are frustrated with traditional finance, whether it be the Fed, global monetary policy, and, specifically here in the United States, but also just all over the world, right? It's printing money, being devalued. So it's a really belief system because, the dollar, and other currencies across the world that are traditionally a part of TradFi and have global governments and the like, they have lost some of the trust of the people across the world. There's highly inflationary countries in certain parts of the world, and then budget sheets of countries, particularly those at the U.S., are just frustrated about printing money and devaluing the dollar and the value system of just traditional finance over just in general. And thus the birth of the decentralized finance of blockchain and cryptocurrencies. So there is a belief system. The dollar has a belief system, but it's also backed by the full faith and trust in the government, which is the big old tax hand that comes down, and there's never not been any tax. So the power of the U.S. government, other governments across the world, but U.S. government to tax really backs the dollar. And so I know there's some arguments out there that says that folks are just printing money willy nilly. That said, being able to collect tax, and a lot of it shores up the dollar, and particularly it being a holding currency across the world. So what's sometimes an item to discuss is that with decentralized finance has a lot of traditional finance fundamentals behind it. I mean, it reacts to meaning going for as far as volatility is concerned. We'll talk about that, how much the breadth and depth of the movement of cryptocurrencies. It reacts to traditional finance fundamentals, interest rate, Fed policy, fiscal policy, sentiment of investors and consumers. So there's there's a strength of the dollar. So there's a lot of fundamental aspects of traditional finance that find themselves in decentralized finance as well, right? So they do work. They don't work hand in hand, but far as uh, how the markets move in cryptocurrencies, right? The word correlation is what direction does one go versus the other, and sometimes the traditional finance markets and cryptocurrencies are moving in the same direction at the same time. So there's you have to understand the backstory and the current story of the cryptocurrency market in order to have a discussion about it, right? So right now, the cryptocurrencies are being the high take up rates and institutions. Your Black Rocks, your Fidelities. All right, a lot of folks, large institutions, the governments are holding a large quantity of crypto, particularly Bitcoin. All right, and also Stablecoin to have in the coffers, right? So when you have consumers buying Bitcoin and believing in it, and also governments starting to introduce regulatory policy that's going to help shore it up a little bit as far as protection. And then you have institutions that are creating ETFs to have the liquidity in the cryptocurrency market, and just having a holding of cryptocurrencies, again, largely Bitcoin. And you have your other coins like Ethereum and Solana, all right, and Doge, okay? But now it's getting more and more solid legitimacy as we go along. It's been about, I'm looking at 10-year charts right now, so that's fairly good. But we're going to talk about the characteristics of investing. When we talk about investing behavior, your investing why, your investing strategy when you're building your portfolio, and what are some of the things out there. Let's start with some of the hype and the volatility and the correction points of some of the history in cryptocurrency. And when we were talking about Bitcoin in particular, it has a lot of volatility. Volatility means it can go up a lot, but it can also come down a lot too. Performance of Bitcoin is a shaky ride sometimes. So when you're on a roller coaster and you're going up, right, and you come down, you're going around, you circle on around. Sometimes that's the ride of Bitcoin. That's what it feels like. Now, over I'm gonna be talking the last 10-year period. When we talk about returns and performance and volatility and the like, and particularly like this year, oh my goodness, you have again fundamental policy, and you have administrations that are coming in that are pro cryptocurrency and the like. Again, that's a fundamental measurement, right? There has been a nice run up in 2024 in Bitcoin, and there's been large run ups of 100%, 200%, 300%. I mean that's incredible. And if you go all the way back, then it could be up to 8,000%. And so, are those run ups sustainable? And they only happen in a short period of time. There's been about 3 or 4 large movements across 10 years. There's a 2018, and then there's also a subsequent drawdown during that time. So these large outstrip performances, we're hearing about NVIDIA a lot, right? NVIDIA is like in the traditional finance market, one of the tech companies, right? Having these outstrip earnings. Yes, you're going to have these unicorns sometimes in the financial markets, and crypto has been one of them. But that wild ride, a lot of folks like the HODL, right? But they share the success stories. They share the success stories, but don't share, the trough. So a lot about the peaks and less about the troughs because of the wild ride. All right. And we have the gamification of crypto and, meme stocks and the like. And this all ties into BFI, which is behavioral finance, and the emotionality behind investing in cryptocurrency. Because it really, I want to say again, to reiterate about the belief system, right? So that's an emotion already, and then you have the wild rides of Bitcoin and cryptocurrencies too. So yes, you can absolutely, and there's some very nice success stories out there. But there's a lot of other stories that you're really not hearing the emphasis on. For example, over a 10-year period, the average drawdown of Bitcoin is 75%. So that means, on average, if there's a drawback in Bitcoin, then you're talking, 30, 40, 50, 60, 75% sometimes. So it can be very volatile. Although it can go up, it can come down in the same, volatile way, so to speak. So we want to educate and not necessarily be anti-crypto, but be crypto cautious about the volatility and also the large run-ups that could happen over a year or two, and then the same drawdowns across a year or two. There was one period across the 10-year period that Bitcoin jumped up 400, 500% over an 18-month period, and then another 400 or 500. So there's been two humongous run-ups in Bitcoin over a 10-year period, and then it leveled off and came back down some too. And what happens is it's kind of like a flight towards this fantastic and phenomenal story, and some folks, were lost during that period. So we're experiencing this penultimate high right now, and we need to decipher, what to think about it and how to be. All right. Now, the Bitcoin market is increasingly correlated to the financial markets as well. So when you're seeing that the financial markets are going up, okay, well, that means because of the underlying fundamental aspects of the economy, policy, sentiment, all of that, then you have a strong financial market. And then sometimes that Bitcoin actually acts equity-like and has it's moving in the same direction, and sometimes, multiple times. So that said, on the opposite side, and then again on the multiple side coming down, you have to be mindful of what your risk capacity meaning the can you take the risk, whether you want to is risk tolerance, your feelings towards risk. Do you want to take a lot, or are you risk averse and don't want to take a little? All right, that's your attitudes toward money, right? So risk capacity is, should you do it? Can you afford to take risk, or can you afford not to take, risk? And that's an underlying thing. Some folks sort of feel that they're either behind on their saving and investing, or maybe feeling disenfranchised when we're talking about young folks, particularly young men. All right. That's driving their why into investing in something, right? And that's why we also have to have education means information about what we invest in, and also our emotion, education and emotion of what we invest in to accomplish our short and long-term goals. A lot of hype right now, a lot of heightened of emotion, and we just maybe have to take a step back and look where everything is, right? And understand and unpack your why. All right. So remember those declines as much as you're remembering the incline, so to speak. All right. And be mindful of stories on both sides of the coin, right? Is that a pun? Yeah. I'm that middle-aged uncle. I'm laughing at my own stuff already, right? All right. Let's talk about who's owning Bitcoin, and particularly young folks. and compare that and juxtapose that to say the Gen Xers and maybe boomers, right? And older millennials. All right. There's a lot of young folks in between 18 and 29, some of this to the effect, that own a lot of cryptocurrency. And one of the characteristics of this particular group is, listen, look, they have the time horizon. Y'all have the time horizon in order to maybe recoup some of the downturns. You can take a lot of risk capacity. And why is this? And this is not advice, but this is analyzing some of the characteristics. When somebody says, "Oh, okay, why am I not taking advantage of Bitcoin?" Well, or any type of cryptocurrencies, right? Well, if there's no, if you can afford to take risk, not just by dollars, okay? I'm talking about just time, because let's say a 20-year-old invests, say, $10,000 in Bitcoin, and then it goes in half to 5,000. Okay, well, their lifestyle right now can warrant them. It'd be okay to lose $5,000. They may be staying at home, right? They have no children. They have, this is just on average, and I'm just using as an example, no spouse, no house to buy or so, or the like, right? So they can say, okay, well, I'm gonna keep buying, and almost wait for the recovery. They have a decade, and also they just have age, just have time, 20 to 30. All right, that guy can come around 25 to 30. So and so on. We have to analyze folks, and people got to get comfortable with different risk capacities. Yeah, yes, risk tolerance is your attitude toward risk, but then your capacities are just simply different. And for Gen X, they more than likely can't have that over concentration to cryptocurrencies when they are trying to get themselves prepared for retirement. If they have 500,000, a million, 2 million in their account. All right. And let's just take 2 million, for example. Let's take 1 million. All right. And it halves. Let's say they're 100% exposed, have a 100% allocation to Bitcoin, and that 1 million halves just like that. Well, these folks are anywhere between 44 and 59. All right. They have half, less than half the time than someone younger, for that to recover. And they're about to use that money for their lifestyle support, not only now, but going into and living retirement. Capacities are two totally different things, right? And for two type of generations. And also, too, for younger investors, I want to caution, when even during the life cycle coming up, all right, being cautious of, gamification, comparing yourself to others, and also just playing a betting game sometimes, right? That in of itself is not investing, it's gambling. Okay. And investing is not a game because it has something to do with your life, right? And some folks want to push their chips all in, and that's cool if that's your choice. All right, but then there's also some of the ramifications that come down for over allocation. That said, again, the risk capacity is different. Young folks statistically are delaying marriage, delaying having children, staying at home longer. Okay. Again, so that affords them more risk, and they could, and if they end up winning, quote unquote, all right, then they were afforded an environment to allow them to take that risk and not have a huge effect on their lifestyle. Then there's those folks that, like I said, that are older millennials and Gen Xers and even boomers, right? That an over allocation, and not saying that you that don't allocate, all right, after you've taken account all of your goals, your risk tolerance, risk capacity, and your resources, okay, and your household. But it's also being mindful of where you are in your life stage and all these reasons why you would allocate to a somewhat speculative, but it is certainly an alternative investment in your portfolio. And how much do you allocate toward? There is a lot of factors, right, that are unique to you. So, I would just say that life cycle matters. Life cycle matters. Okay, let's talk about the behavioral aspects here, right? I don't want you to get I don't want you to get effed up. All right, which is FOMO'd up. Okay, fear of missing out on markets, on particularly cryptocurrency market. Uh, Again, it goes back to different strokes for different folks. You don't know what someone else's capacity is, resources are, their long term goals and whatnot. And yes, there's folks out here winning, y'all. Okay, in crypto, they're winning in Nvidia and all this other stuff. We don't know when folks got in. You also don't know when people got out. Okay, you don't. All right. A lot of folks that take snapshots of their portfolios and they're winning. Some of them are true, but did people hold the line? All right, the whole time. Did people hold the line the whole time in crypto during those drawdowns? And then if they did or didn't, all right, how much was that? Okay. I've seen some articles to where, from some folks say that cryptocurrency helped me buy my house and all this other stuff. All right. But before they won, they lost. Okay. 5 figures, 6 figures, okay, 7 figures. Then, because of it's solely sometimes for the belief system, kept investing in the market or in the cryptocurrency market. Okay. So be mindful of what's the whole story where, when you hear, hold the line, right? Okay. And the reasons why people are investing are so different, right? Because values are different. Time horizons are different. Resources are different, right? Goals are different. So there's a lot there. And following the herd mentality is well documented. So not only FOMO'd, all right, but herd mentality, which is following the herd. Okay, it's kind of like being at a stoplight. You ever realize that when you're at a stoplight? I've done that myself. And then one car inches up, and then you inch it up. The light's red. Why are you inching up when the other person's inching up? It's like a reaction system. Or when somebody's in a room and somebody stands up, then somebody else stands up. I think there's a study or a commercial about that, right? So don't follow the herd. All right. There's a tendency for everybody to get in on tops, that the high points, meaning buy it high and sell low. I'm telling you, the stock market is the only way, well, not the only way, but one of the only ways that people are comfortable with buying high and selling low, and we do it repeatedly, right? But we love Black Friday and stuff like that, where we go on sale and buy everything on sale except for stocks. But there's also folks out there that are buying, dips and everything like that. So when the market's on sale, and you have a concentrated part of your portfolio, which is what they call core and satellite. So you have your main portfolio, your core, and then you attach it with a satellite, a bookend, and that's where you put your concentration stocks or positions or alternative investments in order to maybe try to attract some gains in there, and some of that's going to be a little bit more risk. You have a risk appetite more than your core portfolio. That said, your core portfolio, when you hear core and satellite, you're talking about 80 to 80% core, 90% core, and then you have 10% of your satellites to where you're adding your alternatives in, right? And that keeps in line, your exposure in line for any type of alternative. And this is where, crypto is an alternative. Okay. And there's all types of alternatives, y'all. Hell, gold is an alternative. And y'all know the gold stories, people flying the gold when there's policy out there that people don't agree. That's called a safe haven, going to cash, right? So now, excuse me, y'all, I'm sick a little bit. But then people are now saying, okay, well, when all these fundamentals are out of whack to how they interpret it, then we're going to fly to cryptocurrency and buy even high at some points, right? So be mindful of your behavior, your emotions. So the BFI of TradFi and DeFi. All right. So be mindful of that. Be careful of following the herd and being FOMO'd, right? Don't want you to get effed up. Okay. Also, don't over allocate just because you feel like you're missing out or you're following the herd. All right. Know your long-term goals. This is the point. Know your long-term goals, your why. Thoroughly understand that. Thoroughly understand what you're investing in. All right. Your stable coin, your Doge, your Bit, your Ethereum, all these. Okay. Knowing what you're investing in, the volatility of it, the performance of it, how does it fit with your core and satellite approach? All right. Or do you have the time? All right. To sit and trade, just and like in TradeFi, you have daily stock traders and all that, and watching the markets every second, because that's what they do. That's what they allocate their time to every day. Is that you, as far as TradFi or DeFi? Is that you? Are you dedicating that much time and educating yourself that much in order to become an expert? If not, then you just educate yourself and allocate in a way that fits the goal. Okay. Talk with a financial advisor, do all your research. If you're a do-it-yourselfer, you got to do a lot of research and know what you're investing in. Okay. So, with any alternative, particularly volatile ones and speculative, some people don't believe crypto is speculative, but gold is speculative, crypto is speculative, and all that. And over allocation can add a little pop to your portfolio sometimes, but it can also, too, if over allocation can have a negative consequence. Okay. All right. We've unpacked a lot of things here. Lastly, I want to say that when you're talking about traditional portfolio construction, all right, folks are eschewing the 60-40, but the 60-40 was never meant to fit everybody. All right. 60-40 means 60 in equities and 40 in maybe bonds. Okay. Fixed income. That doesn't fit everybody. All right. You can have the 90% of your portfolio in equities if you like. All right. It's because of the risk capacity, your risk tolerance, your long-term goals, your short-term goals. It can be so it can be 100% at times, right? We have to outpace inflation and longevity. Okay. You can shift your percentages according to market cycles, or I would say economic cycles. So it may be 70-30, and maybe 80-20, and maybe 90-10, and maybe 60-40. Okay. So that's moving up and down the risk capacity and tolerance curve. All right. All right. So is cryptocurrency reshaping policy or portfolio construction? Not really. Not when you take into account all of these aspects that we're talking here. All right. And even so, it's tempering and managing expectations and emotions over time. Right. So you got education, expectations, and emotions, managing those. And that informs how you allocate to cryptocurrency. All right. And build your portfolio and set yourself up for being prepared on how your portfolio is going to move and shake across your lifetime. All right. All right, y'all. We chopped it up about crypto. If you got any questions, but leave them in the chat, and I'd love to have a conversation about that. I know folks are just chomping at the bit to have conversations about crypto. All right, that's what I got for you. If you like what you've seen, heard, and feel, please like and subscribe to the show. And until next time, we'll chop soon. Cheers.